Extreme volatility strikes as Iran denies peace talks.
Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street.
The S&P 500 closed down 25 points to 6,556. The Nasdaq dropped 185 points to 21,762.
The Dow Jones fell 85 points to 46,124.
The Magnificent Seven faced heavy selling pressure.
Microsoft and Meta dropped 2%, Alphabet tumbled 4%, and Amazon slipped 1%.
Apple and Tesla managed to gain roughly 1%, while Nvidia remained relatively flat. Energy was the undisputed winning sector today, surging 2%. On the other hand, consumer discretionary and information technology were the biggest losers, dropping 2% and 1.5% respectively. Bitcoin fell 1% to roughly $70,000.
Gold rose 1% to $4,490.
Silver jumped 2% to $71. West Texas Intermediate crude oil climbed 1% to $89 per barrel.
Today's market action was driven by 3 major stories. First, geopolitical whiplash hit energy markets.
President Trump initially announced a 5-day pause in strikes, but Iran quickly denied any dialogue and threatened to lay mines in the Strait of Hormuz. This dashed hopes of a ceasefire, sending crude oil prices surging and lifting the broader energy sector.
Second, domestic stagflation fears intensified.
New data showed fourth-quarter unit labor costs spiking 4.4% while productivity slowed to 1.8%. This inflationary signal hammered rate-sensitive growth in technology stocks, dragging down the Nasdaq and the Magnificent Seven.
Third, liquidity stress emerged in the shadow banking sector.
Major asset managers like Apollo and Ares capped withdrawals on their retail private credit funds. This gating event spooked investors, accelerating the broader market sell-off and hitting consumer discretionary names hard. The 10-year Treasury yield jumped to 4.4%. The 10-year and 2-year yield curve spread sits at 31 basis points. The US dollar index remained elevated near 99.6. The VIX volatility index surged to 27. Together, these indicators reflect a massive flight to safety, signaling that investors expect higher interest rates for a much longer period. The CNN Fear and Greed Index plummeted to 16, placing it firmly in the extreme fear zone. This implies that market participants are aggressively dumping risk assets in favor of strict capital preservation. Looking ahead, the market outlook remains highly defensive. Investors are de-risking as the protective shield of artificial intelligence stocks exhausts itself against the harsh realities of rising energy costs, supply chain bottlenecks, and persistent inflation. In the next 7 days, traders will closely watch 3 critical events.
On March 25th, the Bank of Japan releases its monetary policy minutes. On March 26th, multiple Federal Reserve governors including Cook and Barr are scheduled to speak.
Finally, on March 27th, the final Michigan Consumer Sentiment Index publishes. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more.
See you next time.